Welcome back for another review of the gold market. Gold's prices over the past 7 days and especially Thursday rallied, reaching a new record high and peaking as the precious metals prices aimed but failed to reach the 2000 psychological threshold. Wide global uncertainty, the weaker US dollar, lower US yields tended to create fertile ground for the precious metals ascent. On the flip side, we have to note the wide correction lower during today's Asian and European sessions. We aim to review these fundamental issues, blending in our own opinion, followed by a conclusion at the end, and the main risk factors for gold's prices in the next few days. Wide uncertainty seems to be characterizing the markets as COVID-19 continues to have a firm grip globally and worries increase about a possible second wave. Any signs that the vaccine appears on the horizon could correct the price of gold lower, yet at the same time more concrete evidence may be required to pacify the market and for gold's prices to correct lower more substantially. Also, the ongoing and escalating tensions in the US-Sino relationships tend to intensify worries, pushing gold's prices even higher. We expect that the rivalry between the two economic superpowers is to continue, especially given that the US positions seem to be hardening and tend to enjoy bipartisan support in the US political stage. The issue has grown to be far more complex than a trade war last year and has spilled over to other issues, making a possible resolution and de-escalation as more difficult. Also, gold's ascent has been fueled by the weaker US dollar, as the currency serves for the precious metals denomination. It was characteristic how gold's prices dropped today, as the Republican Party in the US unveiled its proposal for another fiscal stimulus of about $1 trillion. Negotiations are already underway between the Republican and Democratic parties. We expect that the two sides will be able to find common ground and ultimately deliver a new fiscal stimulus package, which in turn could create substantial support for the USD, hence weaken gold's prices at least temporarily. Low US Treasury yields tended to add to the attractiveness of gold. Tomorrow, the Fed's interest rate decision may prove to be a market mover for gold's price with various possible effects for the bullion. The bank is widely expected to remain on hold, yet the main issue may prove to be the Fed's stance. Should the bank choose to adopt a very dovish stance, expectations for an accommodative monetary policy by the Fed and low interest rates could be enhanced, adding further to the attractiveness of the precious metal. We expect that volatility for the precious metal is to continue, given that the fundamental issues surrounding its price remain unresolved and continue to feed uncertainty. For the next week, a part of the Fed's interest rate decision mentioned earlier, we would also like to note the release of the US GDP growth rate for Q2 on Thursday, which is expected to show a record contraction of the US economy. Also on Thursday, we get the weekly US initial jobless claims figure, and next Monday, the ISM manufacturing PMI for July. Moving now to the technical analysis and gold's 1-hour chart. Gold's new rally in the past week reached a peak on Thursday, testing the 1970 resistance line, yet failed to clearly break it. Hence, the precious metal retreated, tumbling during today's Asian and European sessions. As the precious metal broke the upward trend line incepted since the 21st of the month, we tend to switch our bullish outlook in favor of a sideways movement. The drop of the RSI indicator below our 1-hour chart is characteristic of how the bulls seem to have calmed down for the time being. Should the bears take charge of the precious metals direction, we could see it breaking the 1920 support line and aim for the 1900 support level, while even lower we have the 1870 support barrier. On the flip side, should the bulls take over, we could see gold's prices testing the 1945 resistance line, which withheld gold from ascending on the 27th of the month for a while. Should R1 be broken, the next level could be the 1970 resistance level, while in an ultimate bullish scenario, we note the 2000 psychological hurdle for the precious metal. For more info, please refer to our written report, and from all of us here at IronFX, best wishes for solid trading.